Alright guys, here's a recap video. Tuesday around 9:30. Let's go back to 9:30 when the market opened, New York market open. So going on the daily time frame, every day I mark out my previous daily lows and previous daily highs. I go down to the 4-hour time frame and I see that we're respecting bullish PD arrays and disrespecting bearish PD arrays. So that's just what is happening right now. So we made this gap right here, 4-hour gap, and this 4-hour gap aligning with our previous daily hike. So obviously we're going to be continuing higher to reach out liquidities. So to our left, I marked out some liquidity levels here. Here's one of the liquidities, and these liquidities sitting back here too. This is the all-time high right here, honestly. So that is all-time highs. These are liquidity points you can target as you're drawing liquidity. My model, it's not the Mamba FX model no more. It's the, I've been trading more ICT concepts now. And my model is basically the continuation model because it's higher win rate. And looking on the 1 hour, we also have a gap within the 4-hour gap. You know what I mean? I couldn't mark this out, but it'd be too cluttered. So yeah, so we draw our targets on drawing liquidity. All-time highs are sitting up here, but I doubt we would reach up here because this is like 300 points all the way up. So I doubt that we would reach it, and we've been displacing higher all this time. So at any point I think we would reverse back down here, but we need to focus on what's happening now. So we do have a 1-hour gap in between this 4-hour gap, so that aligns really well. So this is a very strong PD array sitting in this green zone. And then look on the 15-minute, we do have some fair value gaps in this PD arrays from the higher time frame, which also indicates another bias that is a strong confluence too. That adds another strong confluence. You can and little gaps of 15-minute fair value gaps too. But I do want to see price tap back into the zone because we do want to come back down and tap into this 4-hour and 1-hour fair value gap and taking out letting those to go back up and reach my drawn liquidity, which is sitting up here. You can target the swing highs, but since this is close, the 1 hour where I marked it to the left earlier, this is more close. I'm pretty sure price would take this out too and maybe come all the way up, but we don't want to be greedy because our win rate continuation models, most of the time you want to get a 1-to-1 or 1-to-2. So these are the sessions that I drew out. Asia lows are down here, but we're very bullish right now. So if we do inversing this, this is like the condition for me. I don't look for biases, but the condition is if we inverse this 4-hour fair value gap / 1-hour fair value gap, we could be looking at the price going like this, and then we get retraced into the 5-minute or a 15-minute, and then we displace this low right here, or creating a CISD or inverse fair value gap to target this next drawn liquidity of this 4-hour gap. So that is my condition. Or like I said earlier, we could just bounce off of this 4-hour and take out this drawn liquidity up here. I'm not a good speaker, guys. So on the 15-minute, I usually just mark out my session highs and lows, and I look for low resistance to liquidities. We do have equal low sitting down here, but we're pretty bullish right now. But like I said, I do have conditions if we inverse this or respect this. So we do have a 15-minute earlier, which we do not. We do have it right here. Personally, I would wait for a bounce and then a retrace into the 5-minute or 15-minute and then continue higher. You can enter off of this 15-minute maybe. You want a little bit of a good breathing room, or you want to enter off of this. And on the right side, I usually look for SMTs on the same time frame for indicating for a reversal. All right, so what I do is play out price action. I expect this price to go lower, so we do end up tapping into the zone, but I do want to wait for a retracement. So we do end up going lower and taking out previous daily highs. What people can do, this is also called an inverse model. This is also a continuation model, you could probably call it. There's different ways you can trade this. A sweep of some higher time frame liquidity or previous daily highs, then you can try to catch the move with the inverse model right here, which we do end up taking this inverse fair value gap. So I enter off 1 contracts. Usually what I do is just measure how much pips there is. There's 30 points. So I would just risk 1 contract, risking 500 around there. and then usually break evens like right here. But usually with inverses, you want to look for the highest time frame inverse fair value gaps. So I give you the 30-second, the 1 minute, the 2 minute, 3 minute, 4 minute, 5 minute. That's it. So you could have actually entered on the, hold on, let me see. I can't really see actually. I need to check out this thing. Yeah, you can also enter on the 2 minute because that's the highest time frame. Yeah, the 2 minute is the highest inverse fair value gap time frame. You could have entered here. This is basically what I learned from PB Blake and PB Trading. I don't know the other guy's name. And then you could target the swing highs, session highs, equal highs, equal lows, whatever it is. Also unfilled fair value gaps too. Those are great targets on liquidity, or data highs, data lows. Actually, if we were on a 2 minute, we probably would have entered here. So I would have backtracked this. So this is the PB, basically the mechanical model, but they usually target the unfilled fair value gaps on the 15 minute or the 5 minute, which we do have here. So we could target this or this 5 minute gaps. I mean, this is already filled, but those are good targets too. You'll probably target if the 15 minute didn't really get targeted. I mean, it filled. I can't speak. Every time I try to speak, I just ramble my words. I don't really care. Well, actually, there's a 3 minute here, huh? It's okay. So if you were here, the RR is pretty bad. This is why I don't like trading this. I only trade retracements. But I will show y'all. This is the inverse model from PB Blake and PB Trading. So put your risk all the way down to the swing low, and a swing high or unfilled 5 minute or 15 minute, however you want it. You can target your break evens, usually the first swing high. This is your break even. So we do end up hitting TP anyways. So this is the one of the ways you can actually trade. But I don't like trading this because the bigger risk and just lower RR. So what I like to trade is retracements. So I would show y'all real quick. I'm gonna remove this inverse fair value gaps. So back to the drawing board. So we, like I said, we do end up opening and going lower and tapping into this previous daily high and 15 minute fair value gap and higher PD arrays, which are fair value gaps or any order blocks, but I do fair value gaps. I don't do order blocks, but we do end up going lower, tapping into this previous daily high and all that. We do create an inverse fair value gap. We also do create an fair value gap and retrace back into it. So on the 1 minute, you probably could have entered here and have higher RR. Target here or here. See, you see how before we had like 40 points, we have 28 points. This is how I like the trade instead of the inverse model, because sometimes you can just be so late into the entry and have higher, lower RR. I can't think or speak, yo. I could have profited, like if we counted, if I enter in one contract times $20, it's 20 times 98. I could have made, oh freak, 20 times 98, 1,960. Wow, this 20 times 28, I could have risked 560, risking 560 to make 1,960. So this is a positive RR, a 1 to 3, almost a 1 to 4, but it's all good. I don't really like to use 1 minute fair value gaps, but it's also good to see that I guess it does get a retracement and comes back and tap into this 1 minute fair value gap. What I like to do is wait for a 5 minute fair value gap to form, or a 15 minute, and then retrace into that, and then see a displacement candle, or I see a CISD or inverse fair value gap. Personally, I like displacement more. Displacement like this, more volume candles basically. So that'd be it for Tuesday. This is just how I think about today. So hope this video gives you some information. This is, I didn't trade, I back tested. Like when I just got home from work, and I just went on computers, ate a little bit of food, and then but on the charts, see what was happening. So this is probably how I would have entered my trade, because it looks like we did not create a 5-minute gap anywhere, but we did create a 1-minute gap right here and retraced it and went higher. I wonder what happened. Would we went up all the way up here? Let's see. Maybe. Oh, looks like we did retrace. See, like there's a 5-minute right here. Here's a 5-minute right here. I do want to go back in time. See what happened here. We do retrace into this hip. I would like to see strong candles, but I honestly, my draws need to be a little bit more closer to be targeting up here. But I feel like it's so easy today to target these highs. It's basically a 1 to 3. It's basically a 1 to 3. A 1 to 3. No, actually a 1 to 4. So we're risking 1,000 to make 4,000. Let's see. I wouldn't like to trade this anyways, but this is how I like to trade mine. Just to be safe, I would just break even. But usually I would like to wait for a 5-minute fair value gap to be 5-minute fair value gap to be made, and then retrace into it, and then bounce off of it, which can be a displacement candle, CISD, or inversion fair value gap. So that'd be it for the video, guys. Hopefully this video did help some people. I didn't trade this, but I'm just back testing for now, seeing what my thoughts are, and see if anybody took the trade as me. Well, I didn't take the trade, but I'm just trying to learn. All right, see y'all.